Hello, everybody. Welcome to the very first episode of Doc's Investing RX, where we diagnose your portfolios, prescribe the best remedies for long term financial health. I'm your host, Doc, joined by my trusted co host, founder of AfterHour, the always insightful SirJack.
Hey everyone, SirJack, also known as Kevin Shu on the interwebs, CEO, founder of AfterHour. We're like a social network for money. We're starting with active stock traders, and awesome. It's an awesome new app that has been growing a lot recently. We have recently crossed 200,000 active traders sharing live positions, and it's a ball.
Yeah, and I think, SirJack, you got most of those users following you now, right?
Yeah, I'm like the top recommended when people join. So yeah, naturally, I think everyone follows me. But Doc Hollywood, I think you're like number two.
I'm very honored. I really appreciate everybody out there. It's not something that I hunt for or anything. I just try to give some honest feedback and opinions.
I'm
Uh,
curious, how did you originally find the app?
So, it's funny, but Sir Jack, I was a follower back in your early Reddit days, and I followed your growth pattern. I want to say I probably saw you when you were maybe about at the 200,000 mark. And
No
so,
way.
yeah. And so it was one of those things where I saw you grow your portfolio. And the other person I followed from the early days was DFV, also known as Roaring Kitty. And when I saw him put $50,000 on GameStop with these monthly call options, I was like, well, that's interesting. And just like you, I thought, okay, interesting. And looking back, I wish I did had jumped in at the same time, but that's okay. We all live and learn. And that's the great thing about this show and after our community. You see all the different investing styles, whether you're more aggressive, you're
There's
conservative.
so many different styles out there. There's so much knowledge to be shared, right? Like, I think that's the most fascinating thing about having like the modern internet of finance and these online stock communities. And especially when you follow someone with conviction. I think that's what really made me and DFE stand out, right? Because we were so transparent with sharing our positions and screenshots. And maybe we had a pretty unique username. So people kind of follow along on our journey. Because I think the default assumption on the internet is that it's just full of scams and liars and grifters, and you can't believe anyone. But when you do find someone that you can believe, it's actually very powerful to kind of follow along and chat with them and ask them questions and see what stocks they're into next.
Yeah, no, 100%. And that was the funny thing when you talked about a coming project. I was like, okay, maybe he's gonna share his deep knowledge and insights about growing it to 8, $10 million. And so after I came out, I was like, oh, this is interesting. And I actually joined early, but I didn't sync my portfolio or anything early on. I was just
Mhm.
a fly on the wall and watching. And I think it took maybe about 6 months or so before I finally decided to link up and been part of the community for quite a bit now. I was just watching and reading, waiting for
Yeah,
you
yeah,
to
yeah.
post something interesting. And you had definitely had some interesting trades early on when you finally started to repeat your 35,000. Was it Workday or something like that? I was like,
We work. Yeah, that
we
was
work. That's what
dumb.
it was.
Were you posting anywhere else before After Hour?
I was part of the Reddit community, and that was pretty much it. And so Wall Street Bets, I did see you up on the race to 10 million as well. And I think, I don't know about you, but for me, it's always been about fire, right? Financial independent, retire
Yeah,
early, right? And it's funny how $10 million seems like the common number, right? Because like when I calculate it, because you have to think about inflation, right? And
yeah.
by the time I'm done and retired, how much is a dollar worth at that point? And so when you kind of calculate it out, you get into that 7.5, $10 million range where you could probably spend two to $400,000 a year and live very
Hmm.
comfortably.
Yeah, 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 yeah. Yeah, I think that $1 million number comes from like the 50s or even the 20s or something like that. And so it's definitely crept up a lot. And so I think the race to 10 million is perfect.
Yeah. And so when you come to rocking your portfolio itself, I've noticed you don't really touch it. I mean, it's just been sitting there. This is again saving or retirement nest egg. Is that right?
It's a combination of a few things, right? One is obviously the millions are in my 401k. So I can't really touch it until I'm 60 plus. I mean, yeah, I have withdrawn from it here and there to kind of top up in terms of like any kind of big expenses or not. But there's a 10% early penalty withdrawal. So that hurts, right? And it gets taxed as income tax. So if you withdraw too much, you're penalized at the highest income bracket. And I'm in California, so it really, really hurts. And so
Yeah.
it's actually pretty nice because yes, it's a nest egg, it's a safety net, but I can't really touch it, right? And I'm not incentivized to touch it. And so I'm keeping it safe right now because I'm all in on after hour. It's all consuming. It's my weekends, it's my daytime. And the kind of arrangement I made with my family was like, yeah, yeah. So that's going to be safe and parked away in a spy QQ for now. And I'm all in after hour. And then I started over with a new trading account because I still want to walk the shoes of our users. I'm still the top creator. I still care deeply about seeing like what's going on in the app. And so it makes sense to kind of start over with a smaller account. Is I'm very transparent. That it's like less than 1% of my portfolio, albeit it's started to approach one with that recent bump from Celsius.
Yeah, that's incredible. And so that's why going from something like WeWork, I was like kind of questioning your decision making abilities for a little bit. And but you've got a couple of dubs in the row. And I think that's important, right? Because not every choice is going to be a win. But sometimes the trade goes against you and you have to just
Mhm.
learn to cut and run.
Yeah, yeah, yeah. I did write up a more serious version of the Magnum Dong Opus. I think it's linked in the Magnum Dong Opus 2 on my Reddit profile. That kind of goes into like what I look for in a trade. But like I think the kind of foundation here is that I'm a swing trader. I'm a momentum trader. I try to look for a stock that's near its support line so that it kind of make worst case scenario just kind of bobbles around there and with ideally a catalyst or a nice story, a reason for it to pop, right? A reason for it to kind of go up, a reason for the market to kind of reevaluate its potential. Aside, I try to stay away from penny stocks and micro caps, anything below $1 billion, or rather, it's not really even market cap; it's actually volume, right? Kind of try to measure like what is the average daily volume, and just see can it support like 50 million plus of volume every day, right? Like, does the market actually care about this, or are the candles just like super empty? Also, I don't touch crypto. I try not to touch options. I try to find a stock that has potential.
Yeah, and I think that that's another important aspect, right? Because you were part of the crypto world in the early days and myself as well. But again,
Mhm.
for me, it was just a very small portion of my portfolio. Again, you kind of live, learn, and see what works for you. And everyone's
Oh,
trading
yeah.
style is
Oh,
different.
yeah. Oh, yeah, yeah. That was my tuition. I was doing this in crypto. I was going all in one Bitcoin at a time, and very few people know this, but before I was SirJack, I was the Bitcoin king, and my profile picture was the poop emoji from the Emoji Movie. I had a Discord and did all that stuff in 2017, 18. Fun fact, we had Do Kwon in our Discord. That
Very
was, the
cool.
founder of Terra Luna, now in jail.
Very cool. There you
Yeah,
go.
I think I still have an email thread with him where he was sending me like the V0.1 of the white paper.
Yeah. And I'm just hoping that some of the listeners out there, our trading styles may speak to you, they may not. And that's the whole goal of the show itself is to give you some ideas, give you some thoughts, and hopefully help you in your investment journey. So we got an exciting episode today. We'll be doing an investment portfolio checkup of two guests and answering their burning questions about the market. Let's welcome our first guest, Chief Tapaho. Welcome to the show.
Appreciate the warm welcome. Thank you for having me, gentlemen.
All right. So let's dive right in, Chief. You are currently sinking a $192,000 portfolio on After Hour. Tell us a little bit about your investing strategy.
Buy and be patient. That's what's worked for me historically. I know like people want to chase fast money, quick money, whatever. That's kind of like what you see on Reddit, what you see on the internet. And unfortunately, what people join after hours for, but that's not the intended purpose, in my opinion. It's a place to learn, place to grow your portfolio slowly, learn different strategies. It's not just copy trade, but that is a cool feature. My largest investment, Tesla. I never bought a share of Tesla in my life. I bought in 2015 or 2016. I believe I bought Solar City because I wanted exposure to Elon Musk because I felt Elon Musk was a smart man and he was going to make money based on what he did with PayPal. I believe Tesla absorbed Solar City and my shares got converted to Tesla shares pre-split both times. So that's why my average cost is under $12 on Tesla. And I had 500 shares, but Elon let me buy a house and
Yeah.
put siding on the house and, put 19 new windows in the house, et cetera, just by liquidating some of the positions. So buy and hold. That's how you win.
So Chief, I'm curious. I mean, holding is definitely part of the strategy. Do you like check the news every day? Do you kind of just open your phone every morning and ignore the price action? Or do
So
you kind of question like, oh, should I sell today?
yeah, I never thought about selling. I only started actively trading when I joined After Hours.
Hmm.
And the reason I joined After Hours was to manufacture more income because I can't save as much as I wanted to invest after I bought my house. And then I started learning about options. I didn't know anything about options before October of 2024. That's when I joined After
Wow.
Hours. And that's just like the value of the community itself. I didn't know anything about technical analysis. I didn't even know how options worked. So just joining and the exposure of reading all these beautiful people that are willing to share their knowledge, it's been so beneficial. And that's why I get a little upset when people say, "Oh, what you told me to buy this, you told me to buy that." It's like, no, no one told you to buy anything. You need to make your own decisions and you need to limit your exposure to what you want to see and what you don't want to see. If you're just copying trades, then you're not trying to learn. And the whole purpose is you need to learn.
Independent thinking is sexy.
It's very
Now, Chief, I gotta ask though, so besides the Tesla, you do have some large position in BioAge Labs. Now, I noticed like almost a $40,000 position. You have a bullish thesis on the company or?
So that's a funny one. And that also the reason I love After Hour because transparency is sexy. I made a post shortly after I linked my account. This is when I had like 30 followers, so no one saw it. But I don't actually own any of BioAge Labs. So I invested in a company, BioAmber, BIOA was the ticker. I'm a total slut for biotech things, like even though I lose money consistently. I invested in BioAmber and they went bankrupt. So it was like $4,500. I didn't realize you had to like actually file to sell out of your port when something goes bankrupt, but you do because it's still in my port. Um, but that BioAge Labs, they wanted the QSIP for BioAmber. So they bought it, absorbed it. When I linked my port, that showed, and it was in October, it was like a $100,000+ position. I was like, holy shit, I need to be transparent about like, I don't have this much money. I just have to get it off my port. There's no other way to do it. I think from your end or from After Hours end, you know what I mean? Because it's the same QSIP, it's the same ticker symbol. So it's
Yeah,
showing that
yeah,
I have
you're right.
9,000 shares. But yeah, it's completely worthless. It doesn't exist.
Well,
Right.
I think some of us have been there, done that. I do have a ticker symbol. I want to say it's BXRX in my portfolio. It was some pharmaceutical biotech firm and reverse split after reverse split. It ended up being just a few bucks and I just let it ride out. And sure enough, it's delisted, but it's sitting in the account. I also jumped in, funny enough, on First Republic was having its liquidity issue. And I thought it was overdone and they will bounce back because banks always get bailed out, but unfortunately, it didn't get bailed out the way I wanted to. I think JP Morgan jumped in, but they ended up absorbing the company and the shares became worthless. So I have a couple of worthless accounts sitting there. So it happens to, all of us. And if you see some weakness, you have to look at the long term, and hopium is not a strategy. And I keep those tickers in my portfolio as a reminder to say, if it's a risky stock, then you got to be very liquid about your choice and staying in it.
Want to
So
want to hear a fun story that happened right before I started trading 35K to 8 million?
sure.
So there's actually one trade before all of that happened. 'Cause, I started Google at 2019, right? And I had the 401k, maybe started with like 21K or something like that. And so if you guys remember 2019, it was all about like weed stocks. That was like Tilray and cannabis. And I decided to full port. I think the very first trade, I decided to full port into this Canadian weed company called Han Trust, CANN Trust. I think the ticker symbol was like CTST or something like that. And I was like, okay, weed's the future, right? Like, okay, I'm just gonna put it here, not watch it, forget about it, right? And it lost like 75% over the course of a few months before getting investigated for fraud because they kind of claimed more, I don't know, greenhouses than they actually had or approved greenhouses and they weren't under regulation, whatever, right? And so they were getting sued and going bankrupt. And then I finally sold. And so that's actually how I ended up at a 35K number because the 21K turned into like, I don't know, 7K. And then the next year, the 401k, they like topped up back again, to the maximum plus 35K. But fast forward a few years, I get an email about a lawsuit, like those like shareholder lawsuits, right? That's like, oh,
Yeah.
if you were owner at this time and we're representing and blah blah class action, and if you send us like receipts of like your trades, we'll help you try to get back stuff. I was like, okay, sure, let me just find them and send them over. And then fast forward a few more years, I actually got like $5,000 back.
Oh, that's awesome. Oh, wow.
Yeah. Not fully recovered, but it was nice to see like those things actually do work.
Yeah, it looks like the lawyers actually came through for you and didn't take all the money, so
Right, or not all of the money.
that's good. And that's a funny thing that you mentioned about the wheat stocks. I think ever since Biden's election, it's been on the forefront of meme stocks because there's this thought, well, once it gets legalized, wheat stocks are gonna pop. Of course, Biden came and gone and no federal legalization, Trump as well. So from 2020 on, wheat stocks have been sort of on the forefront, but it's hopium, right? It's just hopium.
So it's hopium, and I think that's why it is kind of important to be able to check in on the sentiment, on the news of your stocks almost every day. I was like, "Oh, yeah, I'm just gonna set and forget it for years," right? But if I did that, then, like, CanTrust would've just gone bankrupt, and, like, all this none of these stocks would have gone anywhere, so, yes, I think buy and hold is true, but you can't buy and hold ignore, if you know what I mean?
That's
Yeah.
right. That's right. Well, very good. So now let's go ahead and move on to our next guest, Terrified of AI. You're rocking a $295,000 portfolio on After Hour. What's your investing approach?
I have a little bit of a different background than I would say 99% of the people on AfterHour. I have about a decade plus of financial professional experience. So I have two portfolios linked. I have a 401k and an individual account. In the individual account, I have about 95 grand in SGov. Shout out SirJack. You have a boatload as well. But I recently sold my house, so that's kind of sitting there. It's like gunpowder. If I see an opportunity, I'll put a portion of it in, but I'm sitting on that, waiting to purchase a new house or looking for a new house. So that's what that position's about. I've invested some of that money, but the bulk of the proceeds from the house are sitting in escrow. So I don't even really consider that part of my portfolio. It just kind of sits there to get high yield and I can move in and out of it really quickly. For the 401k, I have cap weighted the top quarter of the Qs. So basically taking the market cap of all the top 25 and then cap weighting them so that my largest positions are NVIDIA, Apple, Google.
When did you start this account in that style?
I started that in 2022 and I've had
Good timing.
back-to-back years of 65% just about.
Yeah, 'cause I noticed, like, Palantir is, like, gone all the way up there, even though
So the
probably when it
other,
started,
yeah,
it wasn't,
I
in your top
I
5, but
recently, yeah, so I actually recently, the one change that I made to the rules, which I don't usually change the rules, which I just did for Q1, is with less regulation and also opportunities for people with AI to get into the top 25. I set up a different kind of screen to have 20% of the portfolio allow to dip outside of the top 25, looking for momentum-based stocks that are shooting up the Qs. So that's where Palantir and Marvel come in. So I
Alright,
did
very
that
cool.
right before. I did that at 80 for Palantir. So it happened to work out with the timing. I mean, I wish I did it at 60 when it took that little dip beforehand, but you can't always time the market. So
No, I do like your investment approach here. This actually reminds me of myself. I used to be actually very heavy in VOO, which is the SPY ETF through Vanguard. I like it because it has low expense fees. But I realized, speaking to a friend of mine who's got a $100 million port, he just focuses on the big winners, right? So your S&P 500 is your top 500 companies. But if you think about it, there's only a small subset of that 500 that carries the market. And do you wanna be in the top 500 or would you like to be in the top 10, right? And so it changed my investment philosophy. Why
yeah,
why invest in the SP 500? Why not the SPY 10? Or
yep,
some
pretty
people call it
much.
the bag 7, right? So I like this approach. I like the fact that you leave a little bit aside for momentum plays or meme plays, especially if you're on the younger side. You have that ability to take some risk, be a little bit more aggressive. I'm glad you explained the SGov strategy because that's this extremely conservative approach, more prudent for the older population that's maybe closer to retirement where they don't want to see huge fluctuations if they need to tap into the funds.
It's
Yeah,
house money. So I have to,
no,
it's
makes
same
sense.
kind of approach, the conservative for that money. And then I have an individual account that is more kind of my play money for after hours. So I have a BlackBerry, Archer. I bought more Broadcom. That's my favorite of everything I own. I think Broadcom's crazy. Love them. So I just on Friday, put another like 10 grand in Broadcom.
No, I love it.
So
No, that makes sense.
Nice.
Broadcom has dipped into a very interesting buying territory, and it's also a Nancy Pelosi favorite.
it's just by
Mhm.
far the largest position in that brokerage. And I don't really consider it, even though it's in the same account, I don't consider it part of the account. It's just
And
if I see an
and
opportunity,
the play money, that's also in the same account. You just like
yep,
mentally compartmentalize it.
mentally, I do a mental accounting for that because if I
Cool.
feel like if March comes around and there's a decent pullback in mid March for me to, and I have the conviction to throw money at that, I want to be able to do that without waiting for money to transfer around. So
Makes sense. Yeah, we've been trying to figure out a way to upgrade the portfolio view so that it shows the different accounts. Because like people are like, "Oh, Jack, how do I follow the challenge account?" Right? You have
mhm.
to know like what stock it's in right now because we just showed like a giant list of all
Yeah,
the
mine would
accounts
be
combined.
impossible to track because I have overlapping positions in both accounts.
Right. We have a couple ideas. It might require folks to organize, but yeah, could be interesting.
All right, very good. So now that we've diagnosed your portfolios, let's open up the floor. Chief Tapo, what's your first question?
All right, Jack, I have a question for you.
Sure.
What drove conviction in closing out your RXRX position and opening up that Celsius earnings play? I, I want to hear
Great
the thought
question.
process. I want to hear why you did it and how you did it.
Sometimes the attendees just tingle. I mean, seriously, some of my best plays have been that way. Maybe my worst too, but survivorship bias makes you forget the bad ones. Just like it was a late night thread that I found. I think it was like on Twitter or something like that. And I started researching more into it. Celsius has always been a pretty awesome stock. A lot of people love it. And I haven't checked out in a while. I assume a lot of people haven't as well, like had like a 60-70% dip over the last 6 months, bringing the price back into more realistic territory. And then the whole like surprise earnings announcements, right? I just love finding things out earlier before other people. And I felt like part of it was this could be an awesome pop, but also part of it was like, I could be right, right? And like I started putting together DD and asking, basically like crowdsourcing the after hour community, be like, hey, what do other people think about this? And it sounded like people were fairly bullish. There were a couple people that were in like the food and beverage space that provided alternative perspectives about Pepsi and supply chain to help like clear up a couple of things that was hard to find. So it was nothing about RXRX. It was just like, Celsius was much more exciting.
That's what's cool though, because like that's like I'm long on RXRX and I actually sold probably a little over 400 shares recently to fuel DCA opportunities that ended up working out, which I'm thankful for. I don't recommend people throw money at a losing position, especially an options position, in order to DCA down because you think your conviction's right. But it worked out with NVIDIA. So that's awesome.
When it comes to this investing. And I want to touch base real quick about what SirJack was talking about. The after hour community kind of stepping in and providing some alternative insights. I think that's one of the helpful things when it comes to providing that information and learning about. He talked about supply chain. And so just getting some alternative thoughts and ideas can be very helpful. When it comes to stocks like Nvidia and so forth, you got to remember that these companies have momentum plays and you look at the bigger picture, but sometimes people take profits off the table. Sometimes these things have to consolidate and things don't move up in a straight line. And so if you have a conviction, you see big whales, you see important people like Nancy Pelosi buying into it, you have to just stay patient and understand that maybe there's a bigger play at hand. A lot of these can be kind of stagnant and you just kind of have to wait it out and be patient.
Doc, I agree 100%. And honestly, I wanted to praise you and thank you because you have a much larger following base than I do on After Hour. But every time everything's red and everyone's panicking, you always say, be calm. And I actually wrote, I wrote what reads like a children's book about parables related to like staying calm and riding the choppy waves because that's all you need to do.
Sir Jack's approach with owning shares is so important because when you own shares, you are a permanent owner of that company, right? You own a share of a company. So whether it goes up and down, you're always going to be an owner of this company and you're going to have some value,
No
right? Whereas if
expiration.
you do options, then you're gambling on price movement, which may or may not happen. So if you own shares of Tesla, even if it's $100 versus 400, you still own Tesla. And as long as Tesla's in existence, your shares have value. If it's on sale and it's cheaper, you can buy a bigger chunk of the company. And who wouldn't want to own more of these magnificent companies rather than bailing on it, right?
Beautiful. Doc, do you mind if I ask you a question now?
No, go ahead.
What drives your conviction in Lucid? How long ago did you buy? I see your average cost is over five, a little high, right? Is this just stubbornness or do you feel there's legitimate value
So the reason I got into Lucid, so I was not part of the CCIV days, right? When I jumped in, it might have been actually right at the tail end. So Lucid released the Lucid Air and it won Motor Trend Car of the Year. And reading over the car company itself and seeing like literally they made the best car that you can buy. Electric car, I should say. Top performance, top efficiency. They had the battery technology. It's a 500-mile range luxury EV. And this reminded me of my Tesla. Now, not many people know this, but I've been an owner of Tesla shares since 2014. So I was very early on Tesla. And the reason was I was in the mall and I saw a Tesla store and I was lucky enough at the time to test drive one without having a deposit down. And it was phenomenal. And so when I saw Lucid, I was like, this story looks familiar. Let me get in on the ground floor. Now, unfortunately, the shares at the time were maybe about $25, but I bought some shares. And as everyone knows, the shares continue to fall because profitability is important. Saudi, the PIF fund, has invested heavily in the company. And I want to say their cost average is around $6 at this point, $5 or $6. So my thought process is look, this company makes a premium vehicle. They have a plan in place, right? So they've now released a Gravity and ramping up deliveries of that car as well. Again, premium electric vehicle, longest range, best efficiency. No other electric SUV on the market will compare. You add that in with financial backing, they have the ability to ramp up and become profitable. I'm not saying they're going to become the next Tesla, but they have a plan in place with a mid-tier car coming in 2026 that appears to be a solid play. Now, again, is it stubbornness? Maybe a little bit, right? I'm already invested in this company. The shares are cheap, and I've slowly started accumulating even more, brought my price average down. So dollar cost averaging, my average again, like you said, is around maybe $5, $6. The company has popped in the past, and those would have been times to take profits, right? Maybe about 2 years ago, it popped up to $18 and then sold off. So again, this is a car company that is heavily shorted, has good squeeze potential, and just being patient on it. So I'm not necessarily adding heavily to this. Is a fraction of my whole portfolio, probably what, less than 5%.
Very small, yeah.
Yeah, and if you add like of all my investments on and off after hour with real estate and everything else, this is, maybe a 1% investment. So I'm
That's
not
the
too
beauty of conviction and yeah, it's the beauty of conviction and patience. Like people need to understand if you have conviction, just have patience.
that's
Or if
right.
you
And
have patience, marry it with conviction. Like one of the two, it'll pay off eventually. Just don't get emotional.
that's right. And there's another user on After Hour, Trogdor, and he's very big in ASTS. And he had high conviction. He held it when it dropped down to $2 and he held on. And sure enough, it popped up to almost $40. It has retreated somewhat, but he dropped almost $1 million on it. And
That's
he went,
conviction.
he peaked, I think, $8 million at one point. So that's conviction. And so I have conviction on the play. Again, I'm not going to YOLO my entire port on it, but a good chunk that even if it pops, it would be a dub.
Beautiful. Thank you guys.
It's kinda like the catch-22 of stocks.
Yeah.
They're not interesting until they are. I mean,
That's right.
everyone is like, "Oh, yeah, how," like, "I've only seen this when it's up, blah, blah, blah," right? Like, no, you probably saw it when it was down too, but you ignored it 'cause, no one wants to buy a stock when it's down.
Yeah, so Jack,
Yeah.
have you ever even thought about, like, some of your old investments, like Big 5 and so forth? You look at them now, and they're only a fraction of where you bought them, and then obviously made your money and cut and run.
Mhm, mhm. Yeah, that was a crazy one. Wow, it's $1.46 right now. Probably not gonna touch that one again. And, I mean, Clove, is another, one that's kinda coming up and up, and I actually really like that stock, and I played it a few times back in the day. Wow.
And that
Mm,
that that's it. It's just, with these companies, sometimes it's the luck of the draw, right? And not
mhm.
everyone's gonna be a winner, and you look at some famous investors like Kathy and her ARK
Yeah.
Investments, and so she has a bag full of potential winners, and she has a Palantir, but for every Palantir or Tesla, she has 10 other stocks that are in the crapper, and so you really have to just be patient and diversify.
Yeah, yeah. Portfolio construction is like a whole science behind it, right? I think, especially when most people they only have a couple $1,000s, it's this style of going all in one stock at a time, kind of my style, helps you at least hone in on your research, focus on one stock, understand kind of what's going on. And once it pops or does enough, you find the next one. A little
Do
bit
you
more
mind if
like
I comment on
episodic.
that?
Sure.
when I was not actively investing, when I was a more passive investor, which is what I've been essentially since I was exposed to the stock market like 15 years ago. But if I wouldn't have taken that sage advice of diversification and, the importance of exposure to different markets and sectors, et cetera, and I just would have went all in on Tesla, I would be retired right now. So,
Mm.
I mean, you got to take everything with a grain of salt. It's just, it's hard to think like, oh, I'm being smart right now. I'm putting my funds elsewhere. I'm not doubling down, tripling down, et cetera. And also marrying that with the idea that you are right. Your conviction is right. Like you believe in the play, you believe in the stock. So why not put everything into it? There's so much duality involved in investing. And it's like, it's wild.
I think there's like two interesting things I think about here. One is I think there's a quote somewhere that says concentration is how you make money and diversification is how you preserve money. So it really just depends on like what your goals are, right? And kind of like what your income
Risk
bracket is
tolerance.
and how much you're investing with. And there's another analogy I take from poker. I'm not a huge poker player. I kind of just play socially with friends, but it's kind of like a parlay, right? Like where if you have $100 in chips and then you go all in and it doubles like 200, right? You can take the 100 and put it to the side. That's like house money, right? Then you can play conservatively or play, aggressively, depending on how close you are to going back under. But if you could somehow parlay that extra 100 again, and now you're sitting on 300, right? Now you have a huge buffer away from your original investment and you're a lot more like loosey goosey. You could try different strategies out. And so it's velocity, right? When you get close to your line, you got to play more conservatively. Once you get above your line, you have a buffer, you can play more aggressively. If you can somehow parlay a win into a second win, and then you're like way above where your line was. Now you're kind of like free and you hit the escape velocity and you can try different strategies out.
That's awesome. There's just so much important aspects to investing. And as we talked about before, sometimes just if you have conviction, you want to have those diamond hands and hold on to it. But at the same time, you have to really analyze the future of a company. So sometimes it's okay to take a little profit off the table. You don't necessarily need to sell everything. But if something's just continuing to decline, you may have to reevaluate your strategy. But hopefully we all learn a little something with our experience, and that's why I participate as much as I can. I have gone through ups and downs. At one point I had hundreds of shares of Tesla with a current $10 average, and I ended up selling a little bit sooner than I should have, but that's okay. You live and learn, and I did make some profits. But
Playing about profits.
that's
The
right.
market's always
Exactly.
there. The market will always be there.
Correct.
Exactly. Yeah. Now, Terrified, you wanted to use your time to share a message with the After Hour community.
Yeah, just wanted to thank everyone in the community for all of the support that you guys have shown me. This is going to be my last interaction with the community on this kind of a level. I will be lurking in the background still for sure, liking posts, maybe a comment here or there, but definitely not to the extent that I was before. Just wanted to say thank you to SirJack for creating such a great community. It's been a pleasure to be on the call with him today here, and just really happy for the people that I've met along the way here. Met some great people, specifically wanted to thank Alloy, Day Zero, and Double Down to Win. There are others for sure, 100%, but this isn't my show and I don't have time to just thank everyone. So if I left you off, don't feel bad about it. But you guys know who you are that I'm really close to. I appreciate all the time that everyone's given me, and maybe I'll be back someday. Thanks again for having me on the show today, Doc. Really appreciate it. I'm sure this will be great, and I will definitely tune in to all the episodes that you pick out.
Thank you very much. I think I speak for everyone that your contributions will surely be missed. Well, that's a wrap on today's episode of Docs Investing RX, ChiefTapaho and Terrified AI. Thanks for joining us. If you enjoyed this episode, be sure to subscribe and let us know your thoughts. And if you want your portfolio evaluated, reach out to us. Until next time, stay smart, stay patient, and keep investing wisely. Thank you very much.